Hello traders, this is the weekly market update podcast from the Pickwise Broker. We start from the economics and especially from the United States. Finally, the much anticipated FOMC rate setting session were held last week, and after 4 years, the American Central Bank lowered the rates. Even though the US economy is powering ahead, the committee decided to converge with the market opinion and chose a rather surprising 0.5% cut. In the companion document, which is called EPS or Economic Projection Summary, the FOMC members reduced their forecast for GDP growth, inflation, and increased their anticipated unemployment rate by 10%. In this context, they endorsed another 50 basis points of rate cuts until year-end, and this is while that the economic activities were described as expanding with a solid pace in the statement. After the publication of the statement and the EPS document, the markets sold the dollar heavily, but it just took less than an hour for the dollar bulls to push back the exuberant bears, and the low of the week was not breached afterwards for the dollar index. I expect high prices for the dollar, as when you cut in an expanding economy by 50 basis points, you will certainly be forced to either reduce the rates with a much shallower pace or even hike because of resurgent inflation sometime in the future. Other data out of the US last week was rather encouraging, as the retail sales were much better than expected, and the initial unemployment claims numbers were much lower than expected, which resulted in a hefty decrease in the 4-week moving average of the unemployment claims. The industrial production report on Tuesday was also much better than expectations and caused the forecasters to increase their numbers for GDP growth higher. Elsewhere in the world, starting from the United Kingdom, the Bank of England kept the rates steady at 5% in line with market expectations. In the MPC committee, or the Monetary Policy Committee, just one member dissented and preferred for a further cut, but the remaining majority were opposed. In the press conference, the BOE boss Bailey sounded rather hawkish, signaling that the rates will be lowered only gradually, provided that inflation is decreasing further. The retail sales report on Friday validated the hawkish hold of the BOE, as the numbers were much better than what markets anticipated. In Japan, the central bank kept interest rates steady in line with market expectations. What caused the yen to devalue after the decision was the cautious note of Mr. Ueda, who refrained from committing decidedly to further rate hikes, and the fact that he reiterated that external factors, especially the financial developments outside of Japan, will also play a role in the decision-making process of BOJ. In Canada, the inflation report on Tuesday was rather weak, as the month-on-month CPI was negative, which will force the BOC to keep cutting rates in the coming months. On the other hand, the retail sales report published on Friday was much better than expected and showed that there is a light in the tunnel for the Canadian economy after a tough period. About the geopolitics, in the Middle East, the assassination campaign of the Israeli Defense Forces is continuing without pause, after hundreds of Hezbollah members were injured, maimed, or killed by detonating their pagers. The Israeli Air Force targeted a building in the southern Beirut, which was host to a sensitive session of high-ranking commanders of Hezbollah, which caused multiple casualties, including Ibrahim Aqil. In response, the Lebanese group has fired hundreds of rockets into northern Israel. In Ukraine, the Russian army is advancing in eastern Ukraine, and the counterattack in the Kursk Oblast is gaining traction. A Ukrainian drone strike that hit an alleged weapons warehouse in the Russian region of Tver in the early hours of Wednesday was so severe that a mini earthquake of 2.8 on Richter scale occurred. It is reported that the US and Europe will send a green light for Kiev this week for deep strikes into Russian soil using Western weapons. For the next week, we will receive PMI reports for UK, Eurozone, and United States. The RBA, or Reserve Bank of Australia, will set the interest rate in Australia on Tuesday, and the Swiss National Bank, which is its central bank, will hold session on Thursday. We will hear from the FOMC members during the week, and the market is eager to hear about the hints about the future setting of the monetary policy for the largest economy in the world.